Hey everyone, hope you're all doing really well. In this video, I'm going to show you how to stake your money in the Crypto.com app and receive up to 12.5% per annum in interest. Now, there are obviously pros and cons to staking, which I will go through during the video. So if staking is something that you've always wanted to do but wasn't sure how to do it, then watch on. So here we are in the Crypto.com app, and the first thing we want to do is go to the main menu, which is accessed by clicking the button down in the middle down there, the Crypto.com logo button. And once we're on this screen, we want to go down to the finance section and click on earn. Now once we're in this earn section, we can click on the question mark in the top right there, and we can see all the different tokens and currencies that we can invest into or stake our money into. So basically it says at the top, earn up to 12.5% PA on your crypto assets. Earnings will be credited to your wallet every 7 days. Earnings paid in the same currency as your deposit. And then just below that, we've got this toggle switch here that says Ruby or below on the left and Jade / Indigo or above on the right. Now, what this means is if you have a Crypto.com Visa card, which is a Jade card or above, then you will receive higher interest rewards on your staked tokens. If you don't have a card, or if you have a Ruby card or below, then these interest rates will be slightly lower. So if we take a look down at Polkadot, for example, we can see it's currently on 10%. So that's what you would receive if you don't have a card, or if you have a Ruby card or below. And if we toggle a switch over to Jade, Indigo or above, we can see that Polkadot has now gone up to 12.5%. So if you don't have a card and you are planning on getting one, then by all means you can use my referral code. I'll leave the link down below. And if you do use that code, then you and I will both receive $25 worth of CRO, which would be great for both of us. So by all means, please use that code. And you can see the current staking rates for Jade here are $4,000, 3,500 euros, 3,000 GBP, 5,000 SGD and 5,000 CAD. And basically what you're doing is you're staking that money. That's locked up for 180 days or 6 months, which means you can't touch it for that period. But whilst it's staked, you will receive the Visa card and you will receive all the benefits that come along with that, which is, you know, there's plenty of rewards, cashback and rebates on Spotify and things like that. And I'm not going to go into too much detail about that, but basically there are some great rewards if you stake for a Visa card. And one of those rewards is you get higher returns on your staked amount here. So that's the overview of the percentage rates that we get on staked coins. So what I'm going to do is I'm going to click on this plus symbol here, and I'm going to stake some Polkadot. Now I've already had Polkadot locked up before. I think I staked £500 worth of Polkadot for 3 months, and over that period the price of Polkadot has dropped like everything else has over the last few months. So there are benefits to staking, obviously. If you're going to put your cryptocurrencies, lock them up for any given period, you will receive a higher percentage rate than if, say, you was to put your money into a savings account in your bank, even an ISA here in the UK. You know, the percentage rates are terrible. You know, you'd be lucky if you get 1% or something like that. Here you're going to be getting 12.5% per year if you lock it up for 3 months. Now obviously there are downsides to this, in that, as I just said, the price of the tokens can reduce during the lockup period. So let's say, for example, you put £500 in at the start and each token's worth £1, you're going to get 500 tokens. If the price of that token drops to 50% of your the initial value, then your staked amount is only going to be worth £250. Now this is never going to happen, obviously, if you've got money in your bank account, but you're never going to earn any interest on that money either, really. So, you know, there are pros and cons to each, but I like to take a little risk. I'm going to put £500 in today for 3 months and receive 12.5% return on that. Now obviously that 12.5% is over the duration of a full year. I'm only going to be locking it up for 3 months, which means I'll get roughly a quarter of that, which is 3.125%. But you know, 3% on £500 isn't bad at all. It's better than I'd get if I was to put it into a savings account. So anyway, so the terms we've got here, we've got a flexible term, which is 8% per annum, which means we can withdraw our money at any time. We've got a 1 month term, which is 10% per annum, which means we'd have to lock our money up for a month. And then we've got the 3 month term, which is 12.5% per annum, which means we have to lock our assets up for 3 months. So I'm going to select this one. I'm going to click continue. Then we've got some terms to agree to here. I understand and agree that my use of Crypto Earn is governed by Crypto Earn. Blah, de blah, de blah. So we need to accept all these. Click continue. Now, how much do we want to stake? Now, there are minimums for each of these. I'm not really sure what it is for Polkadot, but I think 22 was how much I staked last time. It's currently valued at £319.47. Like I say, when I invested that last time, or I staked it last time, it was valued at about £500, so it has come down considerably. And next page, I just need to confirm this. I can confirm that I'm going to lock my DOT up for 3 months. And there we go. So I have now staked my Polkadot for 3 months. And you can see there, just above, it's got total earnings all time, £19.94. So that's how much I've earned in the past from staking these funds. Now, I intend to stake on the 1st of every month. So I'm going to stake obviously today, the 1st of February, which means I can't withdraw that money until March, April, May, 1st of May. But I am going to stake each month on the 1st of each month until I've got 3 amounts staked. So what that would then mean is next month I'll stake another £500 or whatever value it is, and the following month on the 1st of April I'll do the same, which means then each month I'm only going to have 30 days to wait before I can actually release some funds if I need to. So rather than just lock it up now, wait for 3 months, I'll just lock one up every month on the 1st of the month, and that way it will mean that I can withdraw my funds at a shorter period should I need the funds. Now, obviously, the benefit of locking up your funds means that you can sell. Now, you might think that's not a benefit. You might think that's, you know, a negative aspect. But what this means is let's say you lock up some money. No, let's say you don't lock up some money. Let's say you've got £500 worth of Polkadot, for example. And when you purchased it, it was worth £500. And then the price of Polkadot reduces to half of what it was when you bought it. And you see that investment plummet and you might think, oh my God, this is not going to recover. I need to get my money out. So you'll withdraw that money and take out, you know, only half of what you put in. And obviously you've made a 50% loss. And then what will happen invariably is the week after or 2 weeks after, the price of Polkadot will shoot back up and it'll go up to what it was when you invested or even higher. And, you know, you could have potentially made some money. So when you lock up your money in, when you stake it like this and you lock up the money for a month or 2 months or 3 months or whatever it is, it prevents you from withdrawing that. So it prevents you from panic selling basically. So it's a great way of making sure you don't sell at a loss. Now, like I said, there's obviously downsides to that too. You might need the money at some point for whatever reason, if you have an emergency or something like that. But, you know, as I always say, you shouldn't really be investing money that you need anyway. But, you know, things happen and we do need to sometimes take our investments out. So you're not going to be able to do that once you've locked it up. There's no way you can release those funds until the term is up. So just be aware of that. So that's how you can stake your money on the Crypto.com app. Now, as I said earlier, there are benefits to staking and locking your money away. The most obvious one being that you will receive high interest rates, which do increase the longer that you lock your money away for. The downside is that you can lose money if the price of the token drops. Now, this is never going to happen if you have your money in a bank savings account, for example. But as we know, the prices do drop in crypto and then bounce back up again. So staking also prevents you from panic selling if we have market slumps. Aside from staking in the Crypto.com app, you can also stake over on the DeFi wallet, and you do receive even higher APRs over there. I have staked over there in the past, but I prefer to stake in the main app personally. And this is for a couple of reasons. The main one being that I like to keep all of my money in the same place, and this just makes it easier for me to move things about if I want to sell or buy or whatever. Everything's all in the same place, makes it much easier. The second reason is that not every token is available for staking over on DeFi. Polkadot, for example, isn't available to stake, and I really like Polkadot at the moment. This leads me on to this week's term of the week, which is APR versus APY. Now, you may have noticed that with some investments, you receive an APR return, such as when we're staking, like we've just done in this video. And in other areas, such as in the auto VVS mines over on VVS, you'll receive an APY. But what's the difference? So APR, or annual percentage rate, is the simple rate of interest that you'll receive over the course of 1 year. So for example, if you locked up £1,000 with a 12.5% APR, after 1 year you would have £1,125, which is your initial £1,000 investment plus £125 per year in interest, which broken down would be £10.42 per month. There is no compounding of the interest. APY, or annual percentage yield, on the other hand, does compound the interest, which means if you were to invest £1,000 into the VVS mines, for example, you would receive the same £10.42 in the first month, which is 12.5% of £1,000 divided by 12. But then in the second month, you would receive 12.5% of £1,010.42 divided by 12. Your initial investment of £1,000 plus the £10.42 interest received in the first month. So in the second month, you would receive £10.53 interest. In the third month, you would receive £10.63 in interest, and so on and so on. After 1 year of investing in an APY model, you would have £1,132.42 in comparison to the £1,125 from the standard APR model. You can see this example using a compound interest calculator. So let's take a look over here on this website, and we can see that if we put £1,000 in here as our initial balance, we have an interest rate of 12.5% yearly, and it's over 1 year. We've got a compound interest interval of monthly, so 12 times a year. If we click on calculate down here, and we can see this breakdown. Initial investment of £1,000. After the first month, we receive £10.42 in interest, which brings our balance to £1,010.42. That interest would then be £10.53 in the second month, which would give us a total interest of £20.94, total balance of £1,020.94, which means in the third month our interest would be £10.63, which is interest on £1,020.94, and so on and so on. And after 1 year we would have £132.42 in interest, and a grand total of £1,132.42, which is more than obviously the standard APR rate, which would just give us £10.42 every single month. As always, if you have any questions or comments, then please leave them down below, or why not come and join us over on Discord. The link to the servers down below, and you can ask your questions or post your comments there. Thanks for watching, and I'll see you again in another video.